Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in, take a look, see what people are sharing, and I'll share my opinions. If you want to follow me at Square Finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these topics and subjects looking for potential investment opportunities. So we've got Jesse Livermore here, who is the famous trader. Trump and Milena are bearish for BTC because they reveal the scam inherent in all cryptocurrencies. You invent a new form of money and you get to start out with 100% of it. Or rather, as an early adopter, you get the privilege of minting it at a lower cost than everyone else will eventually have to pay to mint it. What kind of scam is that? It's capitalist wealth accrual completely divorced from any kind of value creation. A way to get rich without having to contribute anything or make anyone's life any better. All you have to do is convince other people that they'll get rich too. If they buy your made up thing and extend the absurd game that you're playing, if that's what people think capitalism is, better watch out because the socialists are eventually going to win. On a practical level, the circus around these crap coins is going to make it harder to get the full GOP House to vote for a strategic Bitcoin reserve. Remember, all it takes is for three people out of the 220 to decide that they don't want to permanently etch their name onto the scam, and it will get tabled. Guys, I don't, this doesn't, none of this makes any sense to me at all. Trump coin, Melania coin, fart coin, Bitcoin, none of it. It's all one big stupid scam, in my opinion. Now, could it go higher? It could. There's a lot of stupid people with a bunch of money running at stupid things. That's fine, and that could very well go higher. I'm not participating in it. I don't see any value at all in any of these coins, any of them, altogether. Now, is the network, is that worth something? Well, maybe to a company that can build the network for themselves, centralize it, and store data on it. Yeah, that makes sense. Are people going to store data on the Bitcoin network? No. People going to store data on Ethereum? I doubt it. I mean, maybe they use it for some sort of thing, but why would you use a decentralized proof of work network for like a database for some big corporation? None of this makes any sense to me. It just doesn't make sense. And I think what will happen is it'll all blow up when Nasdaq and S&P 500 finally roll over. That's what I think will happen. Now, if it doesn't, it will amaze me. It will definitely amaze me if it does not blow up to some degree. But the design of a lot of these coins are garbage. And there are some coins that are good, but I don't know why anybody would adopt them. It doesn't make sense. All the early adopters of these coins, what you're doing is you're just shoving money up to the early adopters. But the whole thing is the money will unwind when people have to buy real things that become more scarce. And these coins, you can just make them up for no money and then pretend that they're worth something, but they're not. So eventually, all things will move to its intrinsic value of zero. I mean, that's just the way that I view it. Lawrence McDonald, AI, EVs, Bitcoin for India equals power demand. So this is what I am investing in. It's not crypto, but this is. I want to read this for what it says is there's an unprecedented growth in power demand. The next 20 years will be an unprecedented period. Hold on. The electrification of industrial capacity, automobiles, heating for houses, and other uses is driving unprecedented growth in demand for electricity. On top of that, the world is adding data centers for AI and cloud computing at a stunning pace. To put this into perspective, the global installed capacity for electricity right now is approximately 8,000 gigawatts. To meet expected demand, this installed capacity will need to expand to more than 20,000 gigawatts in the next 20 years. Guys, we're going over double our entire electricity capacity worldwide. In addition, nearly half of what exists today will need to be retired as it's very carbon intensive. Said differently, we need to more than double the current capacity, which was largely built over the past 50 years, while also replacing approximately 50% of what we have. Nothing like this has ever been attempted, but is essential in order to reach the world's net zero goals and drive the AI revolution. The one below it says, we have commitments from customers for more than 15 gigawatts of incremental load by the end of this decade, mostly driven by large load opportunities. To put this into perspective, AEP's system-wide peak load at the end of the last year was 35 gigawatts. We continue to work with data center customers to meet their increased demand while ensuring contracts and new initiatives are fair and beneficial for all of our customers. So we've got, guys, you could create an entire investment career built off of energy and built off of just electricity. That's how much is coming. This is such a great opportunity to invest because we have such huge demand for electricity. And now I know a lot of people are going to say nuclear reactors, which I think nuclear is going to be one big solution for what is coming. In fact, I think nuclear is going to grow way bigger than what people think in the 2030s. It's going to be absolutely insane. But in the short term, I don't know what the heck these guys are going to use. It's going to be coal, nat gas, and that's about it. That's all you've got for an option. I don't think they're going to ramp solar. I don't think it can be provided by solar even. And I don't think it's coming from wind. And even worse, I don't even know why anybody would choose solar and wind for a capacity that is demanding base load power, basically. Like that's not what I would put in. So this is going to get real funky here in the next 5-10 years to try to get all this. I mean, they said that they're going to install all this in the next 20 years. I don't know. I mean, we'll see if nuclear can get ramped up, but man, this is going to be a huge demand, I think, for natural gas and potentially coal even. And here's talking about nuclear. So small modular reactors known as SMRs can be a game changer for nuclear energy. They can be quicker to build with greater scope for cost reductions, driven by innovation. By 2050, over 1,000 SMRs could start operating with a combined capacity of 120 gigawatts. And this is the over 1,000 reactors. And look where it takes off. It takes off where they have it. China's around 2030 and US is around 2033 or something. So they've got it all out in terms of nuclear in the 2030-ish timeframe is what I've got there. And you can see that. Let me put it here. There it is. 2030-ish timeframe. By 2050, we're going to do 1,000 small modular reactors. We need to get on this. We need to get on this now. That's what I'll say. Here's Holger. So this is more about electricity. I'm kind of sticking to the electricity theme here. Holger says, ouch, electricity prices have surged again, exceeding 200 per megawatt hour, driven by the lack of wind and sunlight in parts of Germany, also known as Dunkelflaut or whatever it is. But look at when they started implementing wind and solar in 2020. Look at the volatility they've gotten in terms of pricing. Why would anyone want that? I mean, this doesn't make any sense to me, guys. It doesn't make any sense. I look at things in this world and a lot of what things, a lot of what people say, a lot of what people think countries do. I'm like, why would anyone do this? Solar and wind, if you do not have storage capacity of electricity and or if storage of electricity is incredibly expensive, why would you ever build solar or wind? outside of charging some small battery or outside of maybe something that you might do for charging a battery, like an EV during the day. But like most everything else, I'm like, why would you do this? Um, if this is what occurs when you get all of these price spikes, and if you need to install natural gas power plants as backup, why don't you just run the natural gas power plant if you're building it anyway? And why would you go and run solar and wind? It doesn't make sense to me. Like, why don't we just go all in on nuclear? Why are we messing around depleting our silver resources and depleting other minerals and copper? Because, these things are spread out. Solar is spread out, wind is spread out, and you need copper to connect everything. And if copper gets super scarce or gets into a deficit and super expensive, why would we waste money connecting all this crap? Like, it doesn't make sense to me. I read this over and over, and it's like, this is all going to fall apart. In monopolies, the conclusion is clear. Concentrated portfolios outperform. A big but here, but only if they have a long-term investment horizon. So check this out. Everything underperforms on a short-term duration. So low active share, low fund duration, lose money. High active share, low fund duration, lose money. Low active share, high fund duration, lose money. And the only time is high active share, high fund duration. Concentrated portfolios outperform only if the long-term investment horizon is adopted. Coming down, Logan. So this was in response. It says housing is too expensive. This is Elizabeth Warren, probably someone who just, I don't know where this person comes up with these ideas. She is absolutely completely disconnected from reality. She says the federal government must help bring down costs. No, the federal government should not. But that includes increasing supply, cracking down on corporate landlords, price fixing, and stopping private equity firms from squeezing families and turning blah, blah, blah. These are the people, the institutional ownership as percent of total single family housing stock. Blackstone owns 0.06%, and other institutionally owned single family rentals are 0.5%. Hardly anything of total single family housing stock units. It's not a problem. I don't understand why no one looks at data and they just start flinging crap out of their mouth. We call that something. You know what we call that? It's called constipation of the brain, where they're not thinking, and diarrhea of the mouth. They just run their mouth nonstop about crap they know nothing about and have no solution because they have no idea what the problem is. And that's probably most people, even on Twitter, because everyone's like, well, Blackstone's bought everything. It's like they own 0.06%, really? They own everything? That's the big thing you're worried about? Do some research. So real money goes into meme coins from thin air. They cash out of the meme coins from thin air, and then that creates bag holders. It's pure speculation with no value created. This is the modern financial market. I agree. This is all stupid. It will crash. It is a function of where we're at in the tech bubble. And the tech bubble, and when crap like this starts being created, that's the top. We are at and living in the top of probably the most speculative bubble ever. And why not end it off with a bunch of people gaming the system, running Ponzi schemes left and right, forcing and driving money into these meme coins, creating a whole bunch of eventual bag holders. But what I don't understand, how come people can't see this? Like, what are they missing here? Why can they not see this? I mean, if I bought, up the butt coin or whatever the heck it is, you think I'm going to be buying up the butt coin as a meme coin? You think anyone's going to win with up the butt coin? No. It's stupid. Absolutely stupid. And they're just chucking money. Oh, I'm gonna be rich with up the butt coin. It's like I'm gonna take this up the butt. Yeah, exactly. So here's SMR, the big silver game changer. It's not an overnight event, but an ongoing process. With silver industrial demand now consuming 86% of global silver mine supply, there's less and less for investment and jewelry demand. Silver is one of the most undervalued assets. I would say all of the undervalued assets are the things that people aren't looking at today. All of them. Platinum, palladium, gold, silver, oil, I think, is probably the most undervalued if it were to go short. And what I mean by short, it runs a deficit and it runs the prices way up. Digging a gigantic hole in the backyard, that's pretty tough to do. And if you try to match what a piece of equipment can do, running a few gallons of diesel, it's going to kick your butt. So it's what made our society so efficient. It's the ability to harness energy, use massive equipment to mine, move, transport, manipulate all these different materials into usable products. That is the value. That is what's thrusted us into this modern society. It's the ability to manipulate our surroundings using energy and equipment. That is it. Like that's as simple as you can break it down for engineering. It's like you create a design, you use energy and materials, you put that design to work, and then you generally need equipment to do it. The more efficient you do it, it generally means that you have reduced the amount of energy, which is money, to produce a product. And that's going from earth to end user, which is a completed unit. And a lot of these designs use silver. They use silver, and that's why this is going up so much. 51% to 86% for industrial demand. Now, what happens if silver gets a little bit scarce? What happens if the demand exceeds the supply and inventory levels get super low? Well, the price goes up, right? What if industry is going to use more than 100% of what we've got? And then they start to panic. Then they're going to start fighting over the mines. That's my guess. So this could get real interesting here if supply starts to falter at any point. Demand continues to grow at a rapid pace. Keep in mind we are growing a lot of stuff very quickly. And go look at the materials that those things are using. What is AI going to use? Do you think they're going to use silver? Probably a lot. We better start looking at other, um, not just the Earth, but other planets and areas that we can get some of these minerals from. There's Bob Elliott. Says stocks and bonds get more positively correlated as yields move towards 5%. So what does this mean? So there's a relationship between yields and equities. So when it's below 5%, bond yields and equities tend to be positively correlated. And if you notice, it shrinks down when it gets to about 4 or 5%. Why does it do that? When the economy speeds up, when the economy is good, so to speak, you get a market and yields that move together. So the market goes up in equities, they go up in price, and then they get to a certain point. As it goes past the 5% point, as you go from green to red, so it says at higher yield levels, stocks in the US 10-year yields tend to be negatively correlated. So it goes up in the beginning when things are good. That's called the recovery phase. Recovery phase is when you have low interest rates and the stock market starts to go up, and then you have yields that start to move up with the stock market. As it goes into an expansion phase, you get a disconnect. Interest rates will cross a threshold of 5%, and then they become negatively correlated. That interest rate becomes a headwind for stocks to continue higher. The expansion phase of real estate is generally what drives interest rates up. It's the inflation and the credit creation coming into the system, creating that. Now, we also have a bunch of fiscal spending going on. We've got fiscal diarrhea everywhere. And this thing is just diarrheaing cash all over the place. You see it in meme coins, you see it in the NASDAQ, you see it in AI. We've got bubbles out the yin yang. And I think they're going to have to hold rates under 5% if they want the stock market to continue higher. If it goes above 5% and starts going up, I do think that it's going to be a big pressure on crypto, big pressure on NASDAQ, and it's going to get that capital rotation event, that big capital rotation event that a lot of people are talking about. It's going to happen right above 5%. So we're right there at that beginning of that capital rotation event if we can punch through the 5% area. Then money's going to rotate differently. It's going to say, why the heck am I spending $8 billion on food, $8 billion on energy, $8 billion on all this stuff? I got to sell my up the butt coin and get some real crap, because no one is going to be in Trump, Milena, and up the butt coin, where they're going to have to rotate that money out. They're going to say, I can't speculate in this. The money's starting to dry up. We need to spend it on things that we actually want and need, which will be food and energy and housing and all that stuff. And you can already tell that all that stuff is, quote, unaffordable, right? The affordability is getting horrible on everything. That's the money rotation. That's the cycle. Art Berman says hydrogen isn't an energy source, it's an energy carrier. Producing it takes more energy than it provides, making it a way to store and move energy, not create it, like a battery. Yeah, a lot of people are pretty dumb when it comes to that. They're like, oh, look at the energy source of hydrogen. It's like, no, hydrogen is a battery. It's a storage of energy. You have to burn an energy source to break it apart and then store it. And it's really inefficient. QE says, let's keep it real. It's becoming financially impossible to have kids and raise a family out of this country. Financial engineering and inflation is destroying us. Endless QEs have made housing, college, childcare, and cars unaffordable. We are Japan in 20 years. So the root cause of this, I'm an engineer, guys. I like looking at root causes. The root cause is it's the way that the money system is engineered or designed. You don't need a Federal Reserve. You don't need to create money with interest tied to it. You don't need that. You have to get rid of the way that this money system is designed and how it transfers money directly to the money manipulators. That's the root cause. QE is not the root cause. Financial engineering and inflation is not the root cause. Inflation is a byproduct by the system design. The system design is the problem. Financial engineering isn't the problem. You're trying to build a house on sand, like quicksand. You're trying to build a house in the middle of a lake, and it's not a boat. Think about it for a second. That's your problem. What we originally had is we didn't have a Federal Reserve. That was gone, and we had a system that was built on gold and silver. Gold and silver was the limiting factor for how much money you could create, but there was no interest tied to it. We didn't have federal income tax until we got a Federal Reserve. Go look up in 1913, when the Federal Reserve was created, go look up and see where the federal income tax was. So we got taxed by using this money. It's the design of this stupid money system that they've got. And fiat is absolutely horrible because of the way it's designed. So then people go and they try to go run into up the butt coin and think that that's a store of value just because they made it up. Oh, this can store value. It's going to be great. It's like, no, it's most of these coins in crypto are made up. They're going to be the Sony Walkman that's going to get replaced by the DVD player or the CD player, I guess I should say. And that's where it becomes difficult, because technology is going to replace the old technology, and it's going to do it more rapid than we've ever seen before. So the way that I view things is that all of the value, it isn't going to be in something that you can make or create that's going to be better in 5 years from now. It's going to be in the things that are real and the things that we need that are the inputs to create this technology, to create real physical things in the real world that people need. That's the store of value. And that's why people say, I'm going to store value in oil. So I'm going to store value in copper. I'm going to store it in this mine that I've got underground. I'm going to store it in a vault, or I'm going to store it, whatever it is. That's what I've got there. Here's the best quotes from Warren Buffett. Excellent quotes by Warren Buffett. Says, on earning, never depend on single income Make investment to create a second source. The problem is if you have only one income and that income goes away, you've got a major problem. So diversify your income sources. Get as many as you can and become as resilient and robust as you can. Because if you lose one of those income sources, it may not be as big of a deal. Here's on spending. If you buy things you do not need, soon you will have to sell things you do need. On savings, do not save what is left after spending, but spend what is left after saving. Here's on taking risk. Never test the depth of the river with both feet. On investment, do not put all eggs in one basket. And on expectations, honesty is a very expensive gift. Do not expect it from cheap people. Here's the Resi Club. The housing market's magic mortgage rate is still proving elusive. The magic mortgage rate that this person finds with juice resale turnover is sub 5.5%. Currently, the average 30-year fixed mortgage rate is 7.08. So this is where we're at. This is what they consider to be the magic mortgage rate, somewhere between 5 and 5.5%, where things will get going again. Peter Lynch says, I don't believe in predicting markets. I believe in buying great companies, especially companies that are undervalued or underappreciated. And that's what I've got for today, guys. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website, guys. You can use that word discount in the coupon section. It's $10 off the first month for the monthly membership and a larger discount on the yearly membership if you'd like to join. All right, guys. That's all I've got for today. We'll catch you later. This is Finding Value.